Is the United States economy on a sturdy foundation, or is it teetering on the edge? What obstacles lie ahead? A recent interview with Luke Groman, an esteemed financial analyst, sheds some light on these questions. Groman paints a picture of an economy facing considerable fiscal challenges. Deficits are high, with projections reaching around $2 trillion this year alone. This level of deficit spending is starting to put pressure on global dollar liquidity and might lead to volatility across diverse asset classes. The United States could be edging towards a scenario of fiscal dominance. This is a situation where the Federal Reserve might need to focus on keeping debt manageable, potentially at the expense of other mandates like controlling inflation. Groman anticipates that the Fed may have to pivot back to easing monetary policy and permitting higher inflation to manage the burgeoning debt burden. So where does this leave us in terms of investment? Groman is quite bearish on longer-term sovereign bonds, expressing a belief that they are likely to deliver negative real returns. However, he does provide some investment recommendations that might fare better in the current climate. In the short term, Treasury bills could be a wise move. He also suggests considering an investment in gold and perhaps even a small position in Bitcoin. Equities in certain sectors, such as energy, industrials, and electrical infrastructure, could also prove to be profitable. Despite the fiscal challenges, Groman doesn't anticipate a recession in the near future, thanks to strong government spending and receipts. But he does predict potential major policy changes coming in early 2025, regardless of who occupies the Oval Office. These changes could include a devaluation of the dollar. Groman's overall outlook suggests a continued trend of currency debasement and financial repression to manage the debt. Hard assets and equities could potentially outperform bonds in the long term. In conclusion, Groman's insights paint a picture of a challenging economic landscape, but also provide a roadmap for navigating it. By considering his recommendations, investors can position themselves to weather potential storms and capitalize on opportunities. As always, the key is to stay informed, adaptable, and prepared for whatever the future may bring.